We have finally reached the last session of the day, and I want to thank you all for attending all the panels today. Hopefully they were all of interest to you and you got some interesting tidbits for yourself. This last panel is going to be, again, I think, a fitting end to this day where we are going to look at the investors and find out what they are interested in. We've called it, Where Are the VCs Investing? To start off this session, we'll have Jorge Calvo, who's a partner at Pillsbury, who will be the moderator. And with him, we have speakers from Barry Eggers from Lightspeed Ventures, Asheem Chandna from Greylock Ventures, and Kittu Kolluri from NEA. So I'll invite them on stage. Jorge?
Well, I think we're going to get started right away. And I understand, obviously the subject matter is one that all of you are doubtless familiar with. But I thought as a starting point, I would ask the panelists from an investment perspective, at a very high level, what's your view of software-defined infrastructure? In other words, is it the next nanotech or is it a breakthrough?
The way I like to think about it is, I think a lot of the innovation that's happening in software-defined infrastructure is happening in large part because of the commoditization of hardware. Compute power, network bandwidth have gone up so much that you don't need to invest as much in purpose-built hardware. And that has driven the cost of a lot of equipment, whether that be server or storage or networking, down to a point where you can move the intelligence out of those pieces of equipment and really make them relatively dumb devices and move the intelligence into the software layer. And that started initially in the cloud apps area, or where the application software moved into the cloud with the likes of Salesforce.com or a NetSuite or Box or what have you. And then you started to see some of those elements of cloud infrastructure permeate the enterprise, where people started creating their own private clouds and things like that. But on a more serious basis, you're starting to see some of those same elements now get into infrastructure software, that whether that be database software or whether that be security software, and now increasingly networking and storage as well. So I actually think that, don't know whether it's the next nanotech or the next biotech or whatever, but I think it is a macro trend that's here to stay.
Yeah, Barry, your thoughts. You started at Cisco back in the day.
So software-defined infrastructure, is that what we're calling it today?
That's the term
So,
for the moment.
We should probably define it first. I sort of think about it as functions that are today run on proprietary hardware or systems over time moving to commodity systems where software really is the intelligence on x86. I think that's one way to define it. And I think that there's a lot of excitement about that whole trend. The caution that I would say, and we were investors in Nicira, as you guys were, and that was a nice outcome, but there's just not a lot of revenue being driven by those companies today in software-defined networking, because it takes a long time. Virtualization took, I think, 11 years to go from 0 to 66% penetration of servers. So it takes time for these things to roll out. Let's not get ahead of ourselves. It's an exciting trend. It creates lots of opportunities for startups, but I think you have to pay a lot of attention to the value proposition, the ROI for customers, and make sure that it's a very crisp, proposition.
Sure. So I can just add to that, and also I apologize, I've partly lost my voice here, but so I guess the way I think about it is maybe think about two categories. One is kind of enabling new capability levels. So whether that's new levels of manageability or scalability, or agility, or being elastic, and take things up and down kind of in real time. So really what software-defined infrastructures are about are kind of enabling these new capability levels for customers, whether that's on the enterprise side or on the cloud provider side. The second piece of this is, I think what Kittu and Barry also touched upon, which is just the commoditization or the pricing, right? So basically, as you run these infrastructures at scale, and in particular on the cloud provider side today, and increasingly on the enterprise side in the future, there's a cost angle here, and then clearly, that's where people want to kind of, leverage, low-cost commodity, hardware if possible, and then kind of, implement the software functionality as needed on top of that.
If I may just add to one point that Barry made, about how SDN, as we know it today, and when we are referring to SDN, it's really the OpenFlow based SDN, which is host-based network virtualization. I think that one of the impediments to its adoption on a much broader scale is because it's not really touching the fabric. It's really only virtualizing it at the host layer, and it's inheriting the fabric as it exists today. And what's happened is traffic has actually changed in the data center. It's moved from north-south to east-west, and the current fabric architecture is just woefully out of date to handle that change in traffic pattern.
We'll just keep answering your one question if you'd like us to. You just sit up there
No,
and
feel
look
free,
pretty.
but I do have other questions.
Yeah, no.
Yeah. No, sort of taking it down one level so that on a more tactical basis, what companies that are in this space have your firms invested in? Obviously, I know Kittu, you and Barry were both in Nicera, which I had it's almost, for those who weren't familiar with the company, it was one of the leaders in the space that was sold a quarter ago for $1.26 billion while the product was in beta. Sort of a inflection point, as it were, for interest in this space. But what other companies are you investing in, and what areas haven't you invested in yet but are of particular interest to you?
Why don't you go, Asheem?
Sure. So I'm happy to start. So I wanted to take the areas of interest for. Actually, let me comment on companies we're in first, and then I'll take areas of interest. So at Greylock, we're pretty active investors in enterprise infrastructure, and I've invested in companies like Data Domain, Palo Alto Networks. Also on the software side, companies like Workday, ServiceNow, etc. I think on the software-defined infrastructure side, if I just kind of break it into pieces, there are really two areas of high interest at this point to us. One is SDN, or software-defined networking. Barry and I actually in a stealth company there together, but there are many areas of interest within that. And I would just say, one area of particular interest is certainly, what some people would call SDN overlays or network function virtualization. But essentially just making, being able to tear up and tear down networks and network overlays in data centers or data center to data center, I think is, an area where we're still very, very early in that journey over a multi-year period looking forward. Another area, maybe I could say that's also of interest. Actually, two other areas I'd say of interest are, one is just what people call software-based storage. And again, I would say very early. There's a number of venture-backed startups in the Valley today, but we're very, very early in that journey still. And then the last piece I would say is just kind of, management or orchestration. So just as you have these different layers and as they get componentized and kind of, broken into software pieces, the orchestration on top of this, there may be an opportunity there to build some independent companies.
Go ahead, Barry.
Yeah, so with SDN, one of the key challenges, I think, is just the unit of value proposition, as I said before. And what I mean by that is, with virtualization, you could put virtualization on one server and you got value there for the customer. With SDN, at least at layers 2 and 3, you have to deploy pretty large deployments to get value out of it. I think that's one of the inhibitors for deployment. So I like companies that can narrow that unit of value down. We're seeing some companies in layer 4 through 7 able to do that. We're seeing some other companies with different approaches like PlumGrid and others that I think are showing a smaller unit of value and an easier ROI for customers. I think it's critical to keep in mind for SDN, not having the customer have to deploy really large networks. So that's one of the things that we're really interested in sort of seeing as this SDN world rolls out.
Mm-hmm. From our point of view, We actually made our initial foray into SDI, or software-defined infrastructure, with an investment in Zen, which was basically an open source virtualization company, which we sold to Citrix. And subsequently, I think there are various layers where we have made some investments. Some of them are software-defined networking, as Barry mentioned. We are investors in Nicera, but we're also investors in a company called Pluribus Networks, which is basically, the way I like to describe it is, it's a software-defined fabric. It's actually coming up with a new way of, new kind of fabric architecture. It's more of a class fabric rather than the traditional three-tier fabric that you would have. Software-defined storage is another very interesting area. We've kind of looked at so we made an investment in Tintri, which is sort of in the converged storage space, where compute and storage are converging. And we also have a couple of other stealth investments in the storage virtualization area. Orchestration, as Asheem pointed out, is another very interesting area, especially given that you've got virtual firewalls and physical firewalls, and how do you manage all of that? And then you've got persistent threat mitigation software like a FireEye, and how does an environment deal with signals coming out of ArcSight or a FireEye or a Splunk? Another interesting area for us is in the whole big data area. I kind of view big data as also in some ways fueling a lot of innovation in software-defined infrastructure. So, I mean, I think of Hadoop as really, data warehouse of unstructured data in a horizontally scalable and elastic kind of an environment. We made an investment in MapR there, that is in the same space, along with our friends from Lightspeed. And what else? I'll stop there. But
This is the big data panel now, too.
Yeah, no, absolutely.
just break that wall down and we'll do their panel for them.
Yeah, we've morphed.
Hey, software-defined storage is an interesting area. We've all made investments in that. There's that nice push and pull between the centralized storage guys. We're in Nimble, we're in Tintri with you guys, and sort of the other guys like Nutanix who have converged storage. There's Pernix Data and some things you have done where they're just allowing a software layer to sit in servers. So the real question is how much storage will be done in the server layer being shared by software, and how much storage will be placed in centralized storage. I think it's going to be both for a long time, but there's opportunities in both areas.
Yeah, I agree with you that I think when you think about storage virtualization, people are looking at it in terms of, again, how do you leverage this horizontal scale out and scale out, scale in, sort of the elastic sort of thing by converging compute and storage. But you may also think about converging network and storage, not quite in the same way that you've done with a NAS or a SAN.
Yeah.
Yeah, just to add to that, I would say, just with storage, the other thing that's going on, right, is just, I'd say there's a battle in most of these accounts now between the server admins and the storage admins. Mm-hmm. Because typically, when storage has been, let's say, in the domain of NetApp or EMC, the storage admins have kind of owned that world. These have been expensive systems, but with all the enterprise, grade attributes that people expect, right? And then what's happened over the last few years with VMware in particular, right, is a lot of people are basically running this with direct attached storage, right, and also with Flash, running in these server, running directly in the servers. But many of those architectures don't necessarily have the enterprise-grade attributes, right, that people expect. But those architectures, the server-based architectures, do put things, in the hands of the server admins, right? So the server admins, if you go into many of these accounts, the server admins would like to see all this come under their purview and under their domain, right? And so there's opportunities, for new companies to kind of take direct attached storage, within individual servers, pool that resource-wise, add the enterprise-grade capabilities, add data protection, other things in there. And you're going to continue to see more innovation in that area. I think in parallel, you will continue to see new enterprise-grade systems, with network-attached storage, with tiered storage, Also with all flash arrays, right? So there's almost kind of two parallel paths of innovation running here. And you're going to see new companies, new offerings, and a lot of money made in terms of market caps in both these, on both these dimensions, or both these arrows.
Yeah, I think that's a very insightful comment. One other sort of interesting observation I'd like to make is, if you rewind back to about 15, 20 years, or maybe even longer, there was a lot of vertical integration in the data center, with the likes of an IBM or DEC even, a lot of mainframes and things like that, right? And one vendor owned it top to bottom. And then you moved into more of a modular architecture where you had, Oracle at the database layer, Cisco at the networking layer, Microsoft at the operating system layer, and at the application layer. And you had, various vendors specialized at horizontal layers. And, in came the services guys who stitched it all together and made a lot of money there too. And now you're kind of getting into another very interesting phase where you sort of are getting a mixture of both the vertical integration and the horizontal modular kind of thing, where you have the likes of an EMC or a Cisco or IBM or an Oracle, essentially piecing together technologies. Oracle started off in the database area, has now moved into the compute with their acquisition of Sun. And you got Cisco, which has moved into the blade server area, and in a very short period of time has come up to number 3 in the market there. And so they're getting the compute area. You got EMC that has gone from storage into compute and now into networking. So you're seeing a very interesting consolidation going on, and where the vendors are actually, maybe not innovating as much, but making a lot of money through their services offerings.
Yeah, just to add to that, I think that's also, that's an excellent comment, and just that's definitely a trend where these large players are now becoming more vertically integrated, and I think that creates a lot of opportunity for entrepreneurs, because when you start new companies, in the past there were a limited number of buyers, but now there's more buyers. I sold a networking company last year to Oracle. When we started it, I would have never in my wildest dreams thought that Oracle would be a buyer. Or 4 years ago, I sold a software authentication company to Cisco. When we began that, again, I would have never ever imagined Cisco would be a buyer for that. Mm-hmm. And I think going back to another comment Kittu made, right? I think it's only a matter of time, perhaps, before you see Cisco get into storage, right? And when you do, so then the question is, then does EMC then at that point get into networking, right?
It's all
because those are the remaining pieces, right? So yeah.
Well, one thing that we've talked about is what this trend has led you to invest in. How about the converse of that? Is there, as a result of these developments, are there companies that would have been interesting to you a couple years ago?
No silicon projects.
All right. Well, that's
not investing in any semiconductor projects.
Okay. Any of...
Is the question, are we investing in silicon?
Yeah. No, not whether you're investing in silicon projects. I'm just saying, in any trend, there's winners and there's losers. And in a sense, we're focused on the upside. What has this changed? And the downside is, for somebody starting a company now, given what we've just described, where would you shy away from? And I hear you on silicon.
Yeah, I mean, right? The reason I pointed at semiconductor is because, like I said, compute power has gotten to such a level right now. I mean, just think about it. In 2001 was when Intel first came out with this dual core. Now you've got a quad core in your laptop, right? And you've got chips that are 64 cores. And so you've got so much compute power at your fingertips that somebody coming in and say, okay, I want to build a purpose-built ASIC for something is just not that interesting. So that's the whole point behind SDI, right? All of the intelligence is moving into that because you can use off-the-shelf commercial silicon to get your task accomplished.
Yeah, in some cases, some of these markets are almost like the beginning of a big marathon race, right? Where everyone starts going and just waves of people, and if you start too far back, you're never going to win that race, right? So, in SDN and storage and big data, those markets are very crowded now. We have lots of startups in those markets. So if you're going to go into those markets, make sure you can segment them and figure out where you're going to go and be different and have value. Because just being bigger or faster and cheaper than the next startup is not going to win. So I think that's the problem right now, is that enterprise is so hot that we're overpopulating some of these markets, and eventually that means there's going to be more losers than we would like to have in these markets.
Can you stop investing in any more SDN companies?
Yeah.
Crying out loud,
And we made 8 investments in flash-oriented companies. 8.
So I can just briefly comment. I guess what I would say is, the way I think about the world going forward is just, we're moving to kind of what I'd call mobile-enabled cloud computing. So really the front end for everybody is moving to mobile, over a multi-year basis, and the back end is all going to cloud-based, right? Whether that cloud is run by a public cloud provider, or whether the enterprise runs, the infrastructure internally with all the attributes of a cloud. So really, for any of you that are entrepreneurs out there looking to start companies, you really want to think about that as the backdrop, and then within that, how what you're doing fits in, right? Because that is the macro trend, in my mind.
And the interesting sort of side effect of that is where the front end is moving mobile, right, and the back end is moving into the cloud, is that it's again deja vu all over again. And what I mean by that is, again, if you rewind back to sort of the mid-80s, we lived in a client-server world. And in the 90s and the 2000s, we were in the thin client world, where it was just a web front end, and there was no state there, or it was a stateless kind of an environment. But now, in the mobile world, you're going back into a more of a client-server kind of an architecture, where it's a fat client, where there is some intelligence or some business logic on the mobile device, and just from a presentation layer point of view maybe, but still there's some intelligence there. So that's another interesting sort of deja vu all over again kind of moment.
Yeah. Do you see any new business models emerging from these trends, or their service plays, for example?
Barry?
Well, SaaS is a new business model, relatively, right? Subscription-based, services and software, paid for by monthly or yearly is a new model. Software downloading, the freemium model, is relatively new. These things, are still in early stages of development and being perfected by a lot of companies. Those models are all way better than starting from zero at each beginning of each quarter and trying to sell as much equipment as you can each quarter and making your number, because they start layering on more, the revenues layer on, and it's more predictable and it's better. But that takes a lot of, in the beginning you want to sell the product and you want to get as much money as you can. So you have to sell just a monthly or annual subscription. It takes a lot of discipline to do that for companies, and I just see companies have to start from the beginning.
I can just add to that. I would say, agree with the comments that were made, and just that, for enterprise-facing companies that are selling software, if you can do a subscription-based model, that you will build a more valuable company. It looks like customers are, by and large, willing to go along with those models. They've been willing to go with those models for many years now on the application side, but I think on the infrastructure software side as well, they're increasingly willing to go along with those models, right? So rather than pay once, they're willing to kind of pay on a continuous basis. And that just has lots of value to anybody that's building a company. The other piece, just to expand on the comment Barry made as well, just in terms of go-to-market, right? So I think for selling large ticket items into large organizations, for better or for worse, one still needs what one would call four-legged sales teams, right? You need the sales rep along with the sales engineer to kind of go and call on the account, right? So if you're selling, items of, let's say, more than $100,000, $250,000,
that makes sense.
You still need those people, right? And also, once you start ramping a business to a particular size, it's hard to get away from that, just in terms of driving very large numbers. Mm-hmm. But that said, right, I think what's new today, right, for enterprise companies, and again, this is what, just expanding what Barry touched on earlier, is the power of freemium models, the power of download models, where you can basically, drive marketing out there, drive the customer to your website, let them try for free either on a SaaS service, or let them download, right, and try. And you can instrument, you can watch what people are actually running, and then you can direct your sales as appropriate, to the prospects where they're actually using it. And then if they're smaller ticket items, right, let's say under $50,000, you can close those deals over the phone. So these are very powerful models, and we have a number of companies in our portfolio that are actually exercising these and growing to be significant businesses. It's also very hard for incumbents to fight this, It's almost like a Trojan horse approach. You can get into their accounts with these models, and by the time they realize you're in their customer accounts, it's almost too late because the product is spreading in their account by that point.
Yeah, I think that's a very good point. Thing that I'd add to that is that if I rewind back again, I like to learn from history. The cost of customer acquisition was the same, irrespective of whether you were targeting a large enterprise customer or a mid-market customer. And so, you said, okay, might as well monetize each customer the most, so we'd start with the large enterprise and then swim downstream. But what's happened is the world is a different place today. You have many, many, many more tools available to you from a customer acquisition point of view, which, as Asheem just pointed out, and I can give you an example of Data Domain. Data Domain as a company actually shied away from the large enterprise for a long time in its history. They just focused on the mid-market customer, and by which time, by the time they were had hit their stride, it was very easy for them to go reach those mid-market customers through a combination of channel partners, inside sales, and some amount of outside sales, that they said, I'm not going to waste my time on the large enterprise. I can build a pretty large business out of just the mid-market. And furthermore, being a storage vendor, that too, with backup storage vendor, it was hard for them to go in and displace some of the incumbents in some of the really large enterprises. So I thought that was a very unique and neat way of going to market there, where they leverage that low cost of customer acquisition. And I think that's what you're seeing now, is I have some companies that are generating $10 of revenue for every dollar that they're putting into inside sales, as an example.
Well, I think we've actually hit our time. I'd like to thank the panel for what's been a very engaging conversation, made my job a lot easier. And I'd like to thank the audience for being here, I suppose.
Thank you.